A big reaction to a relatively small change in US data.
Yeah, good morning, Guy. That's right. And if you look at the rounding for the number, it could easily have flipped back into exactly in line with the analyst estimates. So not a very large shift there. I think it tells you on a short-term basis, maybe the market had moved too far too fast. Yet also, there is plenty of reason to still be a little bit concerned about the bond market in particular, right? Because we do know that the Fed is going to be on pause for some period of time. We do know that the US economy is already looking strong. We do know that inflation isn't coming down all that fast. And we do know that we're about to get a new administration, which is going to be announcing some new policies that, all things being equal, may increase supply of treasuries into the market, may push on inflation as well, and growth, and be another reason for the Fed not to be that swift in cutting interest rates any further. I think on the flip side of that, should you be worried about the Treasury market? Big question. Seems like not so much, right? We've spoken to investors all around the world, from Australia to Japan, from Europe's biggest money managers. The message we hear from all of those is, yes, okay, maybe the yields are going to be higher temporarily, but we have faith in the US, we have faith in the Treasury market, and we're there for the long term still.
So, Paul, if you package that all together, does that mean a major roadblock to higher equities, given the wobble that we saw at the start of the year, has now been removed?
Yeah, I feel like, there's a lot of risk still out in front of us, but the market has regained a little bit of positivity when it comes to equities. As long as the bond market can stay in check, if we do get those stimulative policies coming through now from the new US administration, which we'll learn about next week, then yes, that could give the market a new lease of life again, particularly, people coming back into the tech space looking favorably there again.
In terms of your sense of how short-term, though, the moves that we saw yesterday are going to be, there's an awful lot coming up over the next few days, including, obviously, the inauguration of Donald Trump. What is your perception? What is the perception of the people you're talking to? Just how choppy trade is going to be? Yesterday, hugely volatile. Does that continue?
Yeah, I think that it's hard not to believe that that's the case. And if you're sitting where we are in Asia, Guy, we get the crest of the wave there because a lot of the announcements that we've been seeing via social media have been coming through right at the start of our day, when market liquidity isn't good to start with. So there are, we've seen it all before. We've been here before with the last Trump administration. We know that there's going to be flits backwards and forwards, and maybe momentum isn't going to be so easy to trade as it was last year as a result. But we also have a pretty good idea about some of the longer-term impacts, including stronger dollar, pressure on treasuries, and presumably still favour for the equities market too.